Well, let's get you a breakdown now of those earnings. I'm joined now by Thomas Hayes. He's the founder, chairman, and managing member of equity manager Great Hill Capital. Welcome back to the show. How's Tesla's car business doing so far this year? How do the markets view today's report?
Well, Mike, it's good to be back. The results were phenomenal. As we know, Elon Musk is the Thomas Edison of our day, and the hits just keep on coming. As John said, beat on both the top and the bottom line. Revenue was up 81% year on year, so that's huge. The other thing that was key that most analysts weren't talking about, the free cash flow was up 7.6 times year on year to $2.2 billion. Operating margins at a record 19.2%. Despite inflation, and they've got $18 billion of cash on their balance sheet. So the only thing the skeptics have to lean on is the fact that it's trading at 96 times next year's earnings. But when you consider the growth that Musk is talking about, it could be a reasonable valuation.
Let's talk about that growth, because it seems to me the EV marketplace is going to get a lot more crowded, more competition. You would think that that's an issue at some point. What are some of the takeaways from the earnings call, and is that a concern?
Yeah, it's interesting. They came out really strong. First off, they delivered 310,000 cars, which was up 68% from 185,000 the same quarter last year. They say they're going to produce 1.5 million cars in 2022, despite the production and the supply chain issues. And they've been able to navigate these supply chain issues much better than their competition, and that may just give them that jump start. And they're talking about growing at 50% per year for the foreseeable future. Musk says they could even hit 60% this year. So big promises. He thinks they'll get to 20 million cars eventually, and their waiting list continues to grow. The consumer deposits were at 1.12 billion versus 925 million. So the problem is production. It's not demand. The demand is there, Mike.
And you talk about navigating the supply chain issues and that they're doing a pretty good job of it, but I'm sure they'd like to see it to go away. When is that likely to happen?
Yeah, well, they're talking about Q2. They're going to have a record quarter despite Shanghai, and Q2 could be around the same area. They said they could pull a rabbit out of the hat and possibly be another record quarter, but then really accelerate in Q3 and Q4. So their outlook is very, very optimistic here, and they'll even at some point down the road expand the Texas and Berlin factories to deal with that demand.
And then let's talk about another issue, which is higher fuel prices. I imagine that's going to affect demand for electric vehicles as well.
Yeah, that's part of it. I mean, the problem with that is the electricity prices go up as the fuel prices, because you've got natural gas, et cetera. But the exciting thing of what they talked about here, Mike, was the future, the robo-taxi coming out in 2024, which will have no pedals, no steering wheel, and it will bring the cost per mile for the consumer to the lowest price in history. He said cheaper than a bus ticket or a subway ticket per mile, which was pretty promising. And then he said the humanoid robot business that they have coming in the future will eventually be worth more than the car business and more than the fully self-driving robo-taxi business, which was just staggering and quite a surprise to make that bold assertion.
Well, you would think he'd have his hands full with that, but of course, he's been talking about taking over Twitter. Where does his bid stand right now, and what do you make of that?
Yeah, well, he bought up 9.2% of the company, so he put his money where his mouth is. Then he made an offer to buy the company at $54.20, a symbolic number for him. The board said that's too low because our stock was just at $70. But the problem with the board is they have no credibility, since they've neglected to deliver any value for shareholders since going public in 2013. So they're in a vulnerable position. The stock price hasn't moved in about 8 years, and that's more than enough time to prove their worth. Now they have someone who's got a proven track record of operations that can turn things around, making a generous offer. My guess is the deal gets done with a 6 handle, maybe as high as $64.20. I'm not sure if he goes that high, but he's lining up financing right now with one of 2 private equity firms. Apollo's name has been floated as debt financing. He's willing to go into his pocket for $15 billion. And if the board is not cooperative, he's alluded on Twitter that he could do a tender offer directly to the shareholders around the board. And if there's enough interest in that from shareholders, they'd have to withdraw that poison pill that limits him to 15% ownership. So he's got a lot of leverage here, and I think he could do a lot of good things. He explicitly stated he wants the 10% of the extreme on the right and the 10% extreme on the left to be unhappy and to make it a level playing field. And I think he'll be able to do that once he gets control of the business.
It's going to be fascinating to watch. Thomas Hayes, thanks again for joining us. Really appreciate it.
Thanks, Mike.